Welcome to TalkTickers, your go-to for breaking down the latest earnings calls.
We cut through the jargon to get to what really matters.
Exactly. And today we're diving deep into McDonald's, specifically their second quarter 2025 investor call.
Right. There was a lot to unpack there.
Yeah, definitely. So we'll hit the headline numbers first, then get into the strategy, management's commentary, how the market took it, the whole picture.
Sounds good. Let's jump in.
So first impressions look like a pretty strong quarter for McDonald's, right?
Oh, absolutely. It was what we often call a double beat.
Meaning they beat expectations on both earnings and revenue.
Precisely. Which, always sends a positive signal about how they're evaluating.
Okay, double beat sounds great, but let's ground that. What were the actual numbers? How big were these beats?
Well, looking at the non-GAAP earnings per share, that's earnings adjusted for, certain one-off items to get a cleaner view of the core business.
Right, the underlying profitability.
Exactly. That came in at $3.19. The consensus on the street was more like $3.14.
Okay, so a 5-cent beat. About 1.6% better than expected. Solid?
Yeah, solid. And then revenue hit $6.84 billion.
And the expectation there?
Was about $6.69 billion. They beat that by $150 million, or 2.2%. That's a 5% jump year over year.
Okay.
But importantly, it was 4% in constant currency.
Always got to look at constant currency for these global giants.
Mm-hmm.
So stripping out the impact of, the dollar moving around against other currencies.
Exactly. It tells you the real underlying business growth, regardless of FX swings, a key metric for them.
So decent growth, even without currency fluctuations helping. What about sales growth? Comparable sales are always a big focus.
Yeah, global comps were up a healthy 3.8%.
Okay.
And if you break that down, the international developmental licensed markets, think places where they licensed the brand, were particularly strong, up 5.6%.
Wow.
International operated markets were also solid, up 4.0%. And even the U.S., which is always, super competitive, saw a decent 2.5% increase.
So growth across the board, really.
Pretty much. System-wide sales, again in constant currency, were up over 6%. And operating income jumped 11% year over year to $3.23 billion.
And margins still holding up.
Yep. Adjusted operating margin held near 47%, which is, incredibly healthy for a business this size, especially right now.
Those are definitely strong numbers.
Yeah.
We saw the market react positively, right? The stock popped a bit.
It did, yeah. The gains were noticeable, but maybe a bit moderate.
Yeah, like not a massive surge. Suggests maybe the market saw the good news, but perhaps wasn't totally surprised, or maybe tempered by something else.
Could be. A balanced view, maybe, despite the strong print.
Okay, so impressive numbers on the surface, but let's get underneath that. What did management actually say was driving this? What were the strategic levers here?
They really focused on three main things, three pillars they called them.
Okay.
Compelling value, standout marketing, and just relentless menu innovation.
Right, the classic McDonald's playbook in some ways.
Kind of, but what's interesting is how they're making these work together, using their scale. It's not just doing one thing well, it's the combination.
Okay, let's take that first one, value. What did they share about their value strategy? Is it still all about price?
Value is still huge. And they're leaning in. They mentioned the $5 meal deal that just hit its 1-year anniversary.
Still going strong then.
Apparently so. And they made McCrispy Strips permanent. And the big one, maybe? The snack wrap is back.
Ah, yes, the snack wrap. People were clamoring for that.
Exactly. And it's back at $2.99 nationally. Franchisees actually voted to keep it going through the end of the year.
That tells you something.
It does. And internationally, they talked about their EDAC menus, everyday affordable price. Stuff usually under like $4, €4, £4. Really hidden value perception hard overseas, too.
Makes sense. Consistent focus on affordability.
Yeah.
But you mentioned earlier the market reaction was maybe a bit muted. Did management sound cautious about the consumer, especially in the U.S.?
They did. This is really important context. They talked about a bifurcated U.S. consumer.
Bifurcated meaning split.
Yeah, basically. They're seeing a double-digit decline in visits from lower-income folks, people earning under $45K a year.
Wow. Double digits. That's significant.
It really is a major headwind for the whole QSR industry, frankly. But middle-income traffic was slightly positive for McDonald's, and higher-income visits were still growing.
So a real split. Low income pulling back hard, others holding up or growing.
Exactly. Which means they need like two different strategies almost. One for value, one maybe for slightly more premium offerings. It definitely adds context to those strong overall numbers they're navigating a tricky consumer landscape.
So how does that square with the $5 meal deal? Is it enough to counter that low-income drop-off? And what about core menu prices? I mean, you hear people grumbling that a Big Mac combo can be like over $10 now.
Yeah, you hit a nerve there. That's a real challenge. Management acknowledged it. They said they're actively working with U.S. franchisees on core menu pricing.
So they know it's an issue.
They seem to. They know seeing combo meals over $10 on the menu board hurts that value perception, even if the $5 deal exists. It's a balancing act, right? Keep franchisees profitable, but don't scare off customers.
Okay, let's shift gears a bit. This is where things get really interesting for a giant like McDonald's, tech and digital. How are they using that?
Oh, it's huge now. Digital is over 35% of their system sales.
Over a third.
Yeah, massive.
Yeah.
And the loyalty program is a beast. They've got over 185 million active users, 90-day active across 60 markets.
185 million.
And they're aiming for 250 million by the end of 2027. But here's the kicker. Loyalty members visit way more often. They go from about 10.5 visits a year before joining to 26 visits after.
Whoa, more than double the frequency.
Exactly. That's sticky. That's real engagement.
That is a huge lever to pull. Any other specific tech things making a difference?
Yeah, they mentioned Ready on Arrival. It uses geofencing.
Okay, explain geofencing quickly.
It's like a virtual fence around the restaurant. When your phone, running the app, crosses that fence,
it tells the kitchen they're close.
Pretty much, so they can time your order perfectly. They said it's cut customer wait times for pickup by over 50%. Sometimes you just pull up and it's ready.
That's a big improvement in convenience, faster visits, better experience.
And better throughput for the restaurant, too. Win-win.
Okay, so value and digital are key. What about the food itself? Menu innovation and expansion plans.
Still pushing hard there. The Best Burger rollout continues. That's in over 80 markets now. Plan is to have it almost everywhere by the end of 2026.
So upgrading the core.
Right. And chicken is still a huge focus globally. It's growing faster than beef in a lot of places. They want to grab another 1% of global chicken share by the end of 26.
A full percentage point is a lot in a market that big.
It is. Shows you where they see growth potential.
And I think I heard something about new drinks. What's the scoop there?
You did. This is pretty interesting. They're testing a new premium cold beverage lineup. About 500 U.S. stores right now.
Premium like fancy coffees.
More like refreshers and dirty sodas. Think interesting. Maybe fruity or creamy flavor combinations.
Okay. Dirty sodas. Sounds intriguing.
Yeah, it's a trend. But the strategic part is the margins. They expect these drinks to have high teens margins. Much better than a regular soda.
Ah, so a profit play.
And a demographic play. They're aiming these squarely at Gen Z, trying to capture that younger audience with trendy, higher margin drinks.
Smart, high margin new customers. What about just opening more restaurants? Are they still expanding the footprint aggressively?
Oh, yeah. They reaffirmed the plan. About 2,200 net new restaurants globally this year in 2025.
2,200, that's a lot of new stores.
It's huge. And about 40% of those are planned for the U.S. and China, key growth areas. They said the development pipeline looks really strong for years to come, so franchisees are clearly still confident and investing.
Okay, pulling all these pieces together, value, digital, menu, expansion. What does it mean for the financial outlook for the rest of the year? How's management feeling about hitting their targets despite, everything going on?
They seemed confident. They reaffirmed their full-year adjusted operating margin target, still aiming for that mid to high 40% range.
Impressive consistency.
And they actually got a bit of good news on the currency front. They now expect a 15-cent per share tailwind from foreign exchange this year. That's up from previous estimates.
So currency is actually helping the bottom line a bit now.
Looks like it, yeah. A nice little bonus.
What about costs, though? Inflation is still out there. Any relief?
Some moderation expected, they said. Commodity and wage inflation might ease off by maybe 50 to 75 basis points in the back half of the year.
Okay, so easing slightly.
Europe is still facing serious pressure. Beef prices there, for example, up 20%.
Ouch.
Yeah. But they said franchisees are being disciplined with pricing, trying not to pass it all on. So overall, despite headwinds, especially around QSR traffic generally being a bit challenged.
Right, the whole industry is feeling that.
Management sounded confident they can deliver their targets and keep driving profitable growth long term. They feel their strategy is working.
Okay, so given all that context, the strong results but cautious consumer comments, the digital wins, the new initiatives, how should we think about McDonald's compared to its peers in the fast food space right now?
Well, what's really fascinating, I think, is this shift. They've moved from maybe just being the price leader, kind of defensive, to playing real offense using digital and these quick menu hits like the snack wrap or potentially these new drinks.
So less about just being the cheapest, more about engagement and excitement.
Exactly. While some competitors are struggling with traffic and just throwing discounts out there, McDonald's is using its massive scale in that loyalty program to get people coming back more often. It feels like they're playing a different game, leveraging tech and scale in a way few others can match.
So looking ahead, what are the key things investors or anyone following the company should be watching for? Any specific catalysts coming up?
Yeah, there are a few things on the catalyst map, as analysts like to call it. September, you've got the national launch of the snack wrap. That'll be interesting to watch. Then a big one is the Q3 Investor Day. They're expected to give details on that beverage pilot.
The numbers behind the dirty sodas.
Right. How well is it really doing? What are the margins looking like? That could be significant. Then later, the year-end guidance update, which should include that FX benefit.
Got it. Anything else?
Longer term, maybe keep an eye on a franchise vote in November about remodel standards and potentially some regulatory stuff around franchise labor from the FTC. Those could move sentiment too.
That makes sense. So wrapping up this part, what really stands out to you personally about how McDonald's is navigating things right now? They seem to be doing better than many.
I think it's the disciplined execution, especially overseas where results were really strong.
Yeah.
And just how tangible the benefits from those digital investments are becoming. You see it in the frequency numbers. But also that slight difference between management sounding cautious on the U.S. consumer and the market maybe being a bit more upbeat after the results. That kept the stock reaction maybe a little muted.
Suggesting there could be more upside if things improve.
Potentially, yeah. If the macro picture gets better, or if one of these catalysts, like the beverages, really hits big, there could be room for the stock to run. They've built this resilience through tech and their global footprint that's really serving them well.
Okay, perfect segue. Now, for our regular disclaimer, this next bit is purely for entertainment and discussion. We are not financial advisors.
Definitely not. This is not financial advice.
Always do your own homework before making any investment decisions.
Please do.
If we were to brainstorm an outrageous yet maybe plausible trade idea based only on what we heard in this call, what could it be?
Okay, outrageous but plausible trade idea time. Given the stock closed around $309 and the reaction felt a bit capped by that macro caution,
Right.
You could look at something like a short-dated, out-of-the-money call option spread.
Okay, break that down simply. Options can sound complicated.
Sure. Basically, it's a way to make a leveraged bet that the stock will go up by a certain amount by a certain date without buying the actual shares. Lower cost, higher potential reward, but also higher risk.
Got it. So which date and price?
Maybe target the October expiration and look at a spread like buying the $325 call and selling the $330 call.
So betting the stock gets above $325 by October, but capping the potential gain around $330. Why that specific bet?
The core idea, the thesis, is that the market isn't fully pricing in the potential impact of those new premium beverages.
The refreshers and dirty sodas again.
Exactly. If those high teens margins are real, and if they really catch on, especially with Gen Z, that could seriously change the conversation around McDonald's sales and profit growth.
Moving it from just a value play to something more dynamic.
Potentially, yeah. And that Q3 Investor Day, where they'll hopefully give us the pilot data, is the near-term catalyst. If that data is really strong,
The stock could get re-rated higher.
that's the bet. It's aggressive. It hinges on a new product category really moving the needle for a giant company. But it turns the narrative from macro-sensitive value to maybe, just maybe, a bit more of a growth story fueled by these new drinks. It's a bet on that specific catalyst hitting hard.
Okay, let's recap the whole discussion then. McDonald's put up a strong Q2 2025, a solid double beat on earnings and revenue.
Yep, driven by that focus on value, their accelerating digital machine, and some smart menu moves, really performing well even with a tricky consumer backdrop.
It's fairly tricky for that low-income group in the U.S., as management pointed out.
Right, but their disciplined execution, especially internationally, and those ongoing investments in tech and just opening more stores seem to be positioning them well despite those headwinds. They're definitely playing the long game.
So the final thought maybe for you, the listener, to mull over is this. Can McDonald's, with these new high-margin drinks and their powerful digital engine, actually shift how the market sees them? Can they move beyond being just a reliable defensive value stock into something perceived as more dynamic, more growth-oriented?
It's a fascinating question for such an established giant.
We hope this deep dive gave you some valuable insights to consider. We'd love to hear what you think, too.
Absolutely. Remember, understanding the why behind the numbers is key. Keep thinking critically.
Thanks for tuning in to TalkTickers. We'll catch you on the next earnings call deep dive.